Good afternoon. My name is Stacy, and today Simone and I would like to take this opportunity to recap final adjustment standards and how you as accountants in the field can benefit from these adjustments. Before we begin, some housekeeping items I'd like to note are: please be sure to mute your phones as this is a live webinar that is being recorded. Following the webinar, we will also send a copy of today's training to everyone. And lastly, we ask that all questions are held until the training is complete, which will be followed by a Q&A. Types of adjustments. In an open week, units are able to take two types of adjustments: IUTs and AP accruals. IUTs are the transfer of expenses that were posted via MyFinance or expenses that have downloaded from SAP in prior weeks. AP accruals are used to record expenses for invoices that have not been received or P-card charges that have not posted within the current week or period. After preliminary close, units are also able to take IURs, which are the transfers of revenues that have been recorded in MyFinance within the current week, IUAs, which are the allocations or transfers of expenses that have downloaded from SAP in the current week, and final adjustments, which is used to record adjustments that could not be completed within IUT, AP accrual, IUR, or IUA. It is important to remember that once you've posted final, there can no longer be any adjustments made to your financials in MyFinance.
Hi everyone, this is Simone. This slide is going over the guidelines for IUTs, IURs, and IUAs. It basically provides details on the adjustments that can be made or which units the adjustments can be made between, rather. For example, with IUTs, you can process adjustments or transfers between any unit that's available in MyFinance. Since overhead accounts like those held by district managers are not in MyFinance, you would not be able to process a final adjustment or, sorry, an IUT to an overhead via MyFinance. However, with IURs and IUAs, they are limited to units within the complex. So anything outside of the complex, you would not be able to process an IUR or an IUA. It also provides information on how much can be transferred in any given week. So with IUTs, you don't have any limitations on how much you can transfer. However, with IURs and IUAs, you are limited to the balance in that specific GL account in that current week. For example, if you had $1,000 in lunch sales and you wanted to move a certain amount to breakfast sales because it was recorded incorrectly, you would be limited to that $1,000 that you would be able to actually transfer. You wouldn't be able to move 1,500 or anything above the $1,000 mark. With this slide, we're going over the description criteria for IUTs, IURs, and IUAs. And I know this is something that is fairly new, not really familiar, not anything that we've put out to the field prior to now. We realize that when units enter the description for their adjustments in MyFinance, a lot of times the description tends to refer to something that is only understood by the people that work at that particular unit or that complex. What I think is important to keep in mind is that those adjustments are transmitted over into SAP, and SAP is our book of record. So from an auditing perspective, I think it's important that we be able to trace back to any adjustment that's made, and we should be able to trace back to the original transaction that the adjustment is referring to. So the description criteria was something that the team helped to put together to kind of establish a standard for different types of transfers and allocations. So on here we have invoice and P-card transfers or wage transfers, cost transfers, or revenue transfers. And those could also be allocations if you wanted to allocate wages for, say, salaried employees, or if you had, let's say, some kind of cost, some kind of food cost that you wanted to allocate out amongst different units within the complex. With the standards that we provided or the criteria that we've provided, it makes it much easier to identify the original transaction. And I just wanted to give an example of how this could be important. So let's say a P-card charge posts to a miscellaneous GL account in the last week of the period. and you move it to the correct GL account. But then you realize that the product that you purchased on that P card charge has not been received by the unit by the end of the period. And you put in a final adjustment to have your accountant move that charge or defer that charge into the next period. When we get that request, we now have to go into SAP to find that charge and get it moved. But if the description just said shoes or gloves or food, it would be hard for us to be certain that the charge that we're moving is the one that we're seeing in SAP. And at that point, we now reach back out to the field to try to determine exactly what it is that they're looking to move. And it requires communication that maybe the field doesn't have time for at that point in time. So there's usually a lot of a delay when it comes to reaching back out for information when you thought that you had already provided that information. So with invoices and P card charges, we've now provided that the name, the date, and the invoice number are essential information that we need. That way, when we look at the description, it gives us all that we need to identify the exact charge. And if it just so happens that the charge was in a prior period and you just didn't have an opportunity to move it until this period, adding the period number would definitely help us in identifying where the charge is. With wage transfers, we're looking for the employee name, what's being transferred. Is it salary? Is it wages? The dates that you're referring to, the time frame or the total hours if it's a wage employee. For cost transfers, you're looking at cost type and the time period. Is it for a particular day? Is it for a particular week? Is it just something that accounts for a portion of the period? And for revenue transfers, once again, you're looking at the type and the time period. And I also provided examples so that you can see a breakdown of how it could look, and that you don't necessarily need to give an extensive amount of information, but it's just enough that we have a full understanding of what's being done.
There are several advantages to IUTs, IURs, and IUAs. They are all permanent entries that will not reverse in the following week or period. You do not have to provide backup to your accountant for these entries, with the exception of pre-opening units. And if these tools are utilized consistently, it minimizes the number of financial adjustments that needs to be taken at the end of each week or period. Included in this slide are reference guides that will take you step by step through each process. AP accruals. There are 4 key guidelines to AP accruals. It will reverse out in the following week. It will require the unit to follow up with an actual AP entry for charges. And it can be used to account for charges that have not posted or for credits that have not posted. When taking an AP accrual, units should include the vendor or company name and the date. Advantages of AP accruals is that you don't have to provide backup during period end, and it is a tool that can be utilized to help you complete as much as possible prior to preliminary close to minimize the time crunch. We have also provided a step-by-step reference guide on processing AP accruals in MyFi.
Okay, I'm going to go over final adjustments and the backup guidelines. With final adjustments on our end, it translates to us as one of 3 things. It's either an accrual, a deferral, or a transfer. So when you're making an accrual or processing an accrual, it means that you're adding a charge, like an invoice that didn't come in on time, that is not currently showing on your operating statement. When it comes to a deferral, it means that something has posted that should not have posted. So you're looking to push it back to the next period or the following period. And with transfers, you're looking to move it from either one GL account to another GL account, or you're looking to move it from one unit to another unit. So with accruals, in terms of backup, it is essential that we have the invoices, and this is pertaining to final adjustments taken at the end of the period. Any weeks in the middle of the period don't require that you provide this backup, except for the last week. Just wanted to make that clear. But with accruals, it does require that you include or provide an invoice to your accountant for each and every charge that you're looking to accrue. We also want you to be mindful of the fact that we need each of the accruals to be its own final adjustment. So if you had 5 invoices that were various amounts. For each invoice that you have, we would need a separate accrual to be entered into My Finance under final adjustments. What happens, or what we tend to see happen, is that when it's lumped together, your accountant receives it. We're putting through entries, and it could be, say, $5,000 total, and we could end up with 4,800 and don't realize until the last minute that we're missing an invoice for $200 because we just assumed that all the backup had already been provided. And so, days into close, we're now having to follow up with the field to find that last invoice. And with that delay, it kind of pushes back our close process. And there's a lot of pressure on our end in order to get close done in a timely fashion. And we don't definitely have very stringent timelines. So I know when you guys are done with entering your final adjustments, you're hoping to move on to other things that you need to do on your end. So in the same way, just knowing ahead of time what's required just makes it easier for everyone to kind of transition for you out of final adjustments, or my fi close into your everyday work, and then us into our close process. For deferrals, all we're looking for are accurate descriptions. With deferrals and transfers, we already have those charges in SAP, because it is something that's either there that doesn't need to be there, or something that needs to be moved someplace else. So with you providing a thorough description, it just helps us to be able to find exactly where that charge is, so that we can get it moved from that unit over to the other unit, or to get it pushed back into the next period. Once again, we're also asking that with deferrals and transfers that you break down each line item. So if you have a number of P card charges that you're looking to defer, please break them down into individual items. If one is $10 and the other is $56.47, however it breaks down, instead of lumping them all together, it just makes it easiest for us to know exactly what's needing to be moved. With salaries and wages during close, we do need to know what the employee's name or personnel number is, the days that that the entry includes in terms of when they worked in another unit, or whatever the case may be, the total amount that's needing to be moved, as well as any supporting documentation that helps us to understand how you got to that total, or how you made that calculation. And that's especially important with hourly wage transfers, because we don't really know what the basis of that calculation is. So any kind of backup to kind of help us get that calculation together, because that is something that we do need to provide as our own backup, that would be excellent. And once again, we have included a reference guide that gives you information on how to process a final adjustment. Getting a little more into depth with final adjustments, we also have more description criteria. Um, so the same way I was saying before, that we break everything down into accruals, deferrals, or transfers, we request that you go ahead and make that the first word of any final adjustment that you make, so that we can identify what's needing to be done. What happens sometimes is that you're really doing a transfer, but we only see one side of the transaction on our end. We don't see that the amount has been taken in another unit, or a different GL account in the opposite amount. So we'll go ahead and process a deferral from this period to the next period. And then when we dig more into our work, we realize that there's also another unit or another GL account that has the offsetting amount. So we now have to reverse our deferral and now do a transfer. So if you wanted to accrue an invoice, you would put accrue what the vendor name was, and then you would follow that by the date. The same thing with the deferral. And I even gave a screenshot of what pops up in your operating ledger, that's available in my reports. And I believe everyone in Bon Appetit has received uh, the prior webinar that we had, that we sent out. I want to say it was about a month ago, that our other team members, Christy and Chris, had actually put together. That Yes, on my results, my reports. And it goes through how you can get to these reports. So just looking at the snippet, it gives you all the information that you would need, and that you can provide to us to be able to identify what the charge is. Because how you see it on your end is essentially how we would see it in SAP. And with salaries and wages, we're also looking that even with the employee name, the dates, that you also include whether you're looking to accrue that amount, defer that amount, and transfer that amount, or transfer that amount.
Request for adjustments. There are several adjustments units would need to enlist the help of their accountants for: transfers to overhead, transfers below the line, moving expenses to pre-opening, processing entries to and from units closed in MiFi, and moving charges from the balance sheet that have already posted. All requests should include unit numbers and GL accounts units are transferring from and to, and a breakdown of line items that needs to be included in the entry. When transferring to overheads, units should also include an email approval from the overhead holder. When transferring below the line, units must include an email approval from the DM. Finally, when moving expenses to pre-opening, units should provide a salary wage transfer form, an email approval from the DM, an expense transfer form, and invoices or receipts for each charge that is not posted by a department in corporate. Thank you, and we will now open it up for Q&A.